Traders, good morning. This is our weekly market preview for Monday, November the 14th of 2022. Let's jump right into it and take a look at it. It is an interesting week that we have ahead of us as we have the potential here to really get into a new trading range. For the first time since maybe back in September, the second week probably of September. So let's take a look at what we always like to start with, which is our weekly overview of the technicals and the technical analyses that we look at. Right now, we're looking at on the S&P a pivot point area of just below 3,800, which is quite a bit off, quite a bit of ways from where the futures are trading obviously right now after a couple of just massive bullish days. Just an overall buy signal that we have coming in on the S&P right now. We've got a couple of key levels coming into play here potentially this week that we need to keep an eye on. We'll get into that a little bit more in depth here as we take a look at the E-mini chart and break down the support resistance levels that I'm paying attention to this week. But again, for the S&P 500, we are back into a buy zone. I haven't had that for quite a while here, and boy, it has been a strong move over the last few days in the marketplace. If we do look at the E-mini futures, which I like to use for taking a look at levels because it gives us that continuity of overnight price action. There's a couple of things that we're looking at. You know, this was the second biggest green week that we've had all year. And if you look at some of the Fibonacci levels here that I've placed on this chart, if you look at some of the support resistance lines that I've drawn in, I'll give you a little bit of a demarcation here to start with, and that is right around this 39.55 level. We're just right in this area right here, right now, and that 39.55 level is a real key level because above 39.55, we enter into this brand new trading range up in here that we haven't been in, going all the way again back to September. And then below 39.55, well, we enter back into the previous trading range that we have been in since September of this year. So 39.55 really for me is the number one area that I'm looking to watch at. Now, above that, or should I say below that for support, let's talk about support levels first. Obviously, 3,900 is a huge level of support. It's a big one. We'll give a little asterisk or a little star to that one. That's a big one, 3,900. And then below 3,900, 38.57 for me is the next level down here. As you start to look at, some of the past consolidation areas, 39.57, that would put us back into the old trading range that we established back in the second week of September of this year. And that's that trading range that we're looking at down in here. That's a huge trading range. That is a massive trading range. It's between about 38.50 and 35.80. So, you know, almost 280 point trading range in there. But 38.57, all of these numbers are really critical for me. Above or below this really determines if the bulls can continue to keep control here. 3,900 is a massive level, and below that, that would be nice for the bears. Below 38.57, it puts us right back into our previous trading range. Really, those are the key levels that I'm looking at for the bears today. For the bulls, again, 39.57 would be a critical number here. I don't know why I keep hitting that. 39.55. That's a key level for the bulls on the upside to try to keep that in place. Below that, of course, is the big 4,000 level. That's just a huge level. We've come up here, you can see, and we have hit the 4,000 level twice. We did it on Friday. We did it on Sunday evening in the futures, and we've done it this morning here. And both times, all three times actually, we've backed back off of that 4,000 level. So 4,000, that's obviously a huge level. Above 4,000 is about 4,025 as a big level, because this hits the long-term downtrend that we have working right here in this area. And that would be a big demarcation point, 40.25. And then above that is 40.49. Now, 40.49 is the next level up, but really the one that is the key for me above that would be 40.85. 40.85 is critical because that's really almost smack dab on the 200-day moving average. And then above that one is 4,100. So 40.85, again, that's the 200-day moving average. Those are going to be some tough levels, I think, for the market to get above. But those are the levels that I have lined out for today. If you do take a look at the major indices as represented by the SPY that we keep track of, the IWM, which is the Russell, the SPY, which is the S&P 500, the Tues, which is the NASDAQ 100, and the DI, which is the Dow Jones Industrial Average, you can see that they've all had a very smart rebound. Tues still lagging a little bit in terms of its performance relative to the other indices. The IWM is breaking out above that long-term downtrend. The DIA is the one that has been performing the best, really breaking out right now above that long-term downtrend. And again, I think the one that's going to drive all of these going forward is going to be the SPY, as we see whether or not it can, number one, hit, and then number two, drive through that long-term downtrend indicator. So we'll be watching that closely this week. This week is chock full of earnings. Got all kinds of earnings coming out this week. We don't have a lot of earnings plays that we're looking at necessarily right now, but there is a lot of activity this week, both in terms of some announcements as well as some Fed speak, as well as some earnings. So we could be back into another volatile week. You just never really know right now as we enter new ranges how that's going to play out. Are we going to continue to get that expansion, or the contraction come back into place? We look at our 1 week sector rotation, and it really was absolutely techs. It was absolutely techs that drove this. We had some strength in financials a little bit here and there as well, but it was really techs and surprisingly real estate. Two areas that had both been heavily sold over the last previous weeks, now getting that reversion to the mean and snapping back, and it was a big driver of this overall market this last week. Look at the weekly news items for the week, and you can see that we do have quite a few Fed speak scheduled for this week. Right there, we've got a big one that comes off here this morning, as well as some other sort of economic news that could potentially drive us this week. Keep your eye out for those. It's not anything out of the ordinary, but again, we do have core PPI coming out tomorrow. That'll be a big one. In addition to that, we look at the heat map from last week, and other than healthcare, which sort of lagged a little bit here relative to the rest of the market, it was a pretty darn solid week, as you would imagine. With utilities, those are usually a safe haven, and as we start to get risk back on, which is what we did last week, you see those really taking off of the table of items that people are looking for. So they're more of a safe haven. We had risk back on last week, money flowing out of those. Healthcare sector lagging a little bit. It's been fantastic as of late, and we had a trade that we rode that up quite nicely. If we continue to look at the performance, you can see a couple things here. This is last week's performance. First of all, it's obviously just an absolutely massive week for the Qs. But again, it's one of the things that we stress. We trade all four of these ETFs, all four of these indices in separate but complementary strategies. And again, we get this question all the time. Why don't you just trade one index? Well, there is a massive divergence, as you can see there. This is pretty typical on a week in, week out basis. It's not always this dramatic of a move on a weekly basis, of course, but we do see it fairly typically, this type of divergence between the performance of the indices. In fact, some weeks we'll have one up and several down, or vice versa. So we do trade all of these in concert with each other. I think that's an important thing to keep in mind as you're looking at our trading strategies. We look at the put-call ratio. That gives us a little bit of idea of where the sentiment in the marketplace is. If it's above 1, that's kind of a risk-off scenario. If it's below 1, that's risk-on. And man, we are just slammed down to 0.75, which means there's not a lot of fear in this marketplace right now. Expected move, we had talked about this quite a bit last week in the trading room, that my fear was we were going to get a little bit of volatility taken out of this marketplace, and that's certainly been the case. Last week's expected move was almost 117 points. We're back down below 100. We have had some 130 to even 148 weeks, expected move weeks, that have been great for us as traders. This could present a little bit of a challenge for us here in finding the premium that we desire for any double dip opportunities, getting into the marketplace on a double dip basis with our zero DTEs. We've had a lot of success with being able to get 2 in on a day. That's going to be tougher this week. That's definitely going to be tougher for us as we look at that. We look at the fear greed sentiment reading. It is a contrarian indicator. Looks at quite a few things: the stock price momentum, the strength, the breadth of the market, the put-call ratio that we just looked at, junk bond demand, the IV of the marketplace, and safe haven demand. Things where we see the difference in returns for stocks versus, say, for example, treasuries. Money's never really taken out of the marketplace. It just rotates from one sector to another. And we want to look at that and say, okay, is the market flowing into the risk-on assets, or is it flowing out of those types of assets? Well, we're absolutely up here in this greed area right now. We've been there now for a couple of weeks. We were there a week ago as well. It wasn't that long that we were down here in extreme fear. And this would have been obviously the time to buy. This may be potentially the time to sell. We don't know yet, but it is a contrarian indicator. When everybody else is greedy, we want to be fearful, and when everybody's fearful, we want to be greedy. It does mean that we're getting up there a little bit in valuations now in the marketplace. If we look at the open interest areas, you can call these gamma walls. You can call this market profile. You can call this just open interest, but this is where the activity in the marketplace is right now. Now, again, as I am speaking right now, the E-minis are at about 39.90. We're right in this area right now as I'm speaking. So obviously this 4,000 area it's going to be a huge, huge area. This 39.55 area, we talked about that. That's a big area. We talked about 4,100, and we talked about 40.50. All of these areas are areas that we've really focused on and talked about. We talked about breaking down below 3,900. So you can see where the activity in the marketplace is, and you can understand. I'll erase these so that you can see these better. You can see again the correlation there between what I'm looking at on support resistance levels and where everybody else in the marketplace is sort of setting themselves up for trading activity as well. That's our review here for the week, folks. We've got a lot of trades on tap here, but a lot of them for us this week might be adjusting trades that we currently have in. So tune in to the trading room. If you want to check them out, you can come in and hang out with us for a week for free. You can go to try0DTE4free.com, trade live with us, set for 7 full days. If you want to try our investing asset allocation model, which has done great relative to the marketplace that's down this year, you can go to tryastforfree.com. You get a 2-week free trial there to see our asset allocation model and what that looks like. And if you want to come scalp with us, scalp the E-mini futures contracts on Tuesdays and Thursdays, you can do that. You just go to tryscalpingnow.com. Appreciate all of you. Let me know in the comment section what you guys are looking at trading this week. Hope you have a good trading week, and we will see you all in the trading room here shortly.